Hey everyone, in this video we're going to talk about the head and shoulders and inverse head and shoulders patterns, which have a really high potential for making money. These strategies can give traders a big advantage when analyzing market movements and making buy-sell decisions. If you use these patterns correctly, you'll learn how to make money in the markets. Remember, using these strategies can help you reach your goal of making money in the markets. First, let's talk about the head and shoulders pattern. This pattern shows that an uptrend is about to end and that prices are giving signals of reversing. This means that the prices, which were going up, are likely to stop rising and start going down. Let's break down how this pattern forms step by step. When we look at the price movement, the first thing we see is a peak called the left shoulder. This left shoulder is where prices went up, but after reaching a certain point, they started to come back down. Then we have a bigger peak, which we call the head. This is the highest point of the pattern, and it shows that after reaching this level, the prices dropped again. Finally, we see the right shoulder, which forms another peak. The right shoulder usually ends up at a level similar to the left shoulder, meaning that prices rise again but can't reach the height of the head before they start falling again. When these three peaks, left shoulder, head, and right shoulder, form, we get what we call a neckline. The neckline is an imaginary line that connects the lowest points of the left and right shoulders. When the prices break below this neckline, it signals a trend change, meaning that the prices are likely to keep falling. At this point, opening a sell position can be a great way to make money. The idea behind this pattern is simple. Prices rise to a certain level, but they can't break through and then start to fall. This is a signal that the uptrend has ended and a downtrend has started. If the prices break below the neckline and stay below it, it gives a strong signal that the trend has changed, and it's a good opportunity to sell and make money. The stop level, which is where we set our point to cut losses if things don't go as expected, is usually just above the right shoulder. This helps us minimize losses if prices go up instead of down as we expected. For setting a target, we measure the distance from the peak of the head down to the neckline, and we expect prices to fall by that same distance after the break. Reaching this target can offer a great opportunity to make money. Now, let's move on to the inverse head and shoulders pattern. This pattern indicates that a downtrend is coming to an end, and prices are likely to start rising. This means that the prices, which were falling, will likely stop dropping and begin an uptrend. The inverse head and shoulders pattern also forms step by step. First, we see a dip called the left shoulder. This left shoulder shows where prices fell, but then found some support and started to rise again. Then we have a deeper dip, which we call the head. This is the lowest point of the pattern, and after reaching this point, prices start moving back up. Finally, we see the right shoulder, which forms another dip. The right shoulder is usually at a level similar to the left shoulder, meaning that prices drop again, but can't reach the depth of the head before they start rising again. When these three dips, left shoulder, head, and right shoulder, form, we get the neckline. The neckline is an imaginary line that connects the highest points of the left and right shoulders. When prices break above this neckline, it signals a trend change, meaning that prices are likely to keep rising. At this point, opening a buy position can be a great way to make money. In this pattern, the stop level is usually set just below the right shoulder. This helps us minimize losses if prices go down instead of up as we expected. For setting a target, we measure the distance from the bottom of the head up to the neckline, and we expect prices to rise by that same distance after the break. When we reach this target, it can lead to a great money-making opportunity. Both of these patterns help us understand when a trend is changing, and if used correctly, they provide opportunities to make money. When you see these patterns forming, don't waste time. Take advantage of these opportunities. Remember, correctly interpreting the signals from these patterns can open the door to great money-making opportunities. So if you want to be successful in the markets and make money, you need to learn and apply these patterns carefully. That's it for our video today. Thanks for watching. Remember, using the right strategies in the markets can help you make money. Wishing you all great profits.